Thanks for joining us. I'm Marlon Bowling with you as we start a new trading month and a new trading quarter. We are now into the month of April. We have the first quarter closed, and we had the USDA reports that came out last Friday. And it caused some gyrations in the market. Once those numbers came out, they were highly anticipated reports. Of course, Friday we got the prospective plantings report and the quarterly stocks report. And here to help us make sense out of what the report showed, let's go to the phones and bring in Rich Nelson of Allendale Incorporated. Have him on the line right now. And Rich, how do you think the market reacted all in all after those report numbers all came out? And we can kind of review those if you want.
You know, for the most part, numbers came in pretty much, I got to say, originally right back where we should have been just a few weeks ago as far as acreage expectations. You know, 4 million acres lower on corn, 6 million acres higher on soybeans. The trade certainly does suggest that we're probably at maybe some different acreage numbers now, especially with some price changes on beans versus corn. But certainly for the time that the survey was taken, as of around March 1st, these are probably realistic numbers. So I think on that respect, not a big market-moving event on that side here.
All right, so the all wheat category at 4606 was just as expected. Now the spring wheat number, 11.31 million acres, was maybe just a touch higher than expected. One thing not showing on this screen, but one thing that did show up that I was noting later on the cotton, they had estimated acres at 12.2 million acres. The trade looked like it was looking for a number between 11.5 and 12 million acres, but yet the market rebounded sharply after the report came out anyway.
That's exactly right. I think at this point, just like with our corn-soybean discussion, also with the cotton as well, maybe they're suggesting that this is probably a good point in time as of March 1st, but I think the trade's expectation, certainly on cotton also, is maybe that this 12.2 is probably a little aggressive and maybe just a good start for the March report, but by the time it's all said and done, we probably will see some lower than what was reported cotton acres here.
Did anything stand out in the U.S. stockpiles numbers that were reported, the quarterly grain stocks numbers? They were all higher than what the trade had expected.
That's exactly right, and that did imply kind of what we've been discussing here on the corn side, at least, that feed residual may be a little weaker than expected. So for the first quarter, feed use would have been 4% higher than last year. Same thing for the second quarter, which was just reported right here. USDA still has a 9% higher than last year number plugged in for the whole year. So this does confirm the trade's discussion that certainly on the feed residual side, maybe USDA's got a little too high numbers plugged in there, and that certainly was reflected here on Friday.
Well, now we can set our sights ahead now, and we're going to be focusing, I guess, on the rest of the harvest period in South America, but we're also going to be getting USDA's start now today of our weekly crop progress and condition reports. They'll go from now through the end of November, but to be real honest with everyone, in the early reports here, the first 2 or 3 weeks at least, there probably won't be too much in the way of information other than maybe, some wheat, maybe some rice numbers?
That's exactly right. Winter wheat will be the only focal point for us on today's report, and the next few reports will be adding spring wheat to the spring wheat planting to the mix, and then, of course, corn and soybean planting in the weeks after that. So, yes, today's number probably won't be too exciting for a market reaction, but certainly it gets the ball rolling for the quote-unquote new crop year.
And from what I understand, it's going to be a little while before the planters can roll in most of the Corn Belt here.
That's certainly right, and it's not unusual for us to be having some maybe little moisture issues here in the portion of the Midwest, but certainly as far as the trade expectation, we'll probably be for right now on target for most areas. Portion of the Western Corn Belt may see some above normal moisture this month, so maybe some delays in portions of the West here.
One of those good news, bad news scenarios where temporarily it might cause delay in planting, but long term, boy, that soil moisture could really help that crop out when it comes to summertime. Rich, I'll bring you back here in a moment. We'll talk about our livestock trade as well. Our guest, Rich Nelson of Allendale Incorporated in McHenry, Illinois. We'll have more with Rich right after this. Well, we're back with you, and we're talking right now with Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're talking about our livestock trade right now. And before we came back on the air, Rich and I were discussing this extremely wide range that we saw of cash cattle activity as we wrapped up last week. And Rich, I'm looking at my notes here, and it looks like, from what I can determine, the range of trade on the cash cattle market last Friday afternoon would have been from about 124 to 130. I'm hearing the majority of trade seemed to kind of gravitate more toward the 128 area. It was still considered kind of a light trade. But I guess analysts are a little bit reluctant to categorize what kind of a trend that actually was. Some say maybe that was actually steady to maybe a couple of dollars lower. I don't know exactly how you put it there.
You know, I think with the fact that we didn't see these northern trades pass that 130 point too much, I think that's where will be the catch right there. So the Kansas through Texas run did trade mostly steady, maybe a dollar lower at the worst if it did trade lower. But it was the fact that we did see the northern plains have those numbers maybe pull back a little bit there. And we probably will see, as a whole, the plains all averaged out, probably around this 128 range. That would be down from last week's average trade of 130 on a light basis. So we'll see what numbers USDA suggests on the summer report released later this morning.
I'm sure you saw it too, but boy, there was a big drop in the wholesale beef trade Friday afternoon on the beef cutout values reported by USDA. And it was down in the choice cuts, but man, it just got plastered on the select cuts. They were down $4.05 Friday afternoon at 204 even per hundredweight. That was a huge drop for one afternoon.
That sure is right. So we dropped for the week on choice $7.50, for the week on select $11.55. So we're definitely kind of changing the trend from what was 5 weeks in a row of very good and strong gains made each time around for wholesale beef. Now we're seeing that change, and also we'll probably for this week see that really begin to be reflected on the cash cattle end as well.
Rich, explain something. Some analysts I've been talking with are really scratching their heads. Here you have the feeder cattle closing very sharply higher Friday afternoon. Yet you had the wholesale beef trade that we're just showing down hard on Friday. And we also had kind of a struggling cash cattle market out there. And it seems like the fundamentals don't really support a stronger futures trade like that. But yet here we have even the higher corn futures against the feeder cattle market. And they were able to rally over $1 on Friday. That seems so counterintuitive to most traders. How did they do that?
That's exactly right. And I think for this time of year, we have something special. We got to keep in mind the fact that a lot of these sale barns are filled with what we call more or less the grass-based buyers, people who want to buy these lighter frame animals, run them on grass for lightweight, moderate gains, but still which can be profitable with a very cheap feed source. This week's, or I should say the recent rebound in moisture in the plains, I think we've definitely reignited a lot of interest from these grass-based buyers who are competing with the feedlot buyers. So I think that's our focus we got to look at right now here.
Do you look for a rebound in the hog trade anytime soon or not? They closed weaker Friday.
On the hog end, we do. In fact, we've been bearish here for a little bit, but let's be realistic on a seasonal basis. We're near some seasonal lows for this market. Usually in about 2 weeks from now, we start this seasonal rise higher into summer based on tighter supplies. So while we've pounded this market with bearish news these past 2 weeks, and these are very valid bearish news points, I think for this point, we're probably going to see this market change at some point in the next couple of weeks here.
Rich, good to talk with you. Thank you for all the information. Rich Nelson of Allendale Incorporated in McHenry, Illinois. We'll have more from the folks at Allendale throughout the program. So, Janet, getting the table set.
Here we go for another week.